Well, in this example, as you can see, we are observing the overall index chart, actually showing a downward trend over a certain time period. And after that, the first bottom and then the second bottom have formed, which can actually be a double bottom pattern. But the important point in this example is to always remember that, and if the completion time of price patterns is prolonged, the target they will give you will also be extended. That is, a pattern that is formed with its entire schematic representation in a short time frame will show its target to you very quickly. However, if, as in this example, the formation of the pattern takes a long time, now what I see here is that it has taken about 7 to 8 months for these two troughs to form. So we should also wait for a considerable time for this pattern to show its target to you. So be aware that the time frame for forming the pattern and the time frame for the target that the pattern will later give you are proportional. Here I see my trend. Let me bring my pen. I see my trend here, and in this trend that you observe, we have actually formed our first bottom in this area. Then actually I will also change the color of my pen to red so we can see better. Well, as you can see here, we have a bottom here, our first bottom, our second bottom, from actually the formation of these two troughs. A peak has emerged, which is this peak, and I can draw a horizontal line in this area, which forms my neckline that was formed here. Now from here on, even see that my breakout point has been time-consuming, and various sinusoidal fluctuations have occurred around this line until finally, in this area, we witness my breakout point. Well, in this area, the breakout point is created at least equal to the distance. From the neckline to one of the valleys, it doesn't matter. You can consider the entire environment as this distance. If this is my distance, meaning it's my HH prime, from this area I witness at least growth. See, the minimum is very important. This means you are witnessing at least this much growth in the chart that you see. The chart has grown much more than that as well. So this point, could have been a good point for, in fact, my entry signal into the stock. Well, the examples related to the double bottom are also finished. Let's move on to see the next pattern together in the next slide. The next pattern is the triple top pattern, which is essentially created with the same schematic representation as the double top, but another peak will actually be seen. Well, in the next slide, we will examine the schematic representation of this pattern together. Yes, as you can see, the price chart of the stock is actually in an upward trend, and from a certain area onwards, the chart's trend becomes such that we are caught in a first peak, a second peak, and a third peak. The chart gets stuck, and that forms the schematic representation that has been created here. And we see three tops in this area. Let me bring my pen. See, we have these three tops here. One of the important features of the triple top pattern is that the tops or peaks must be equal. We see three tops here. These three tops have created two valleys between them, the first valley and the second valley. From the joining, from the geometric location of connecting these valleys, a line is created that we call the neckline. And this neckline actually comes to intersect somewhere. In this area, the purple point is my breakout point. And this is the point where the break actually occurs, meaning where the third peak in its range comes to intersect the neckline. When the breakout point is created, at least the distance from this neckline to one of these peaks, meaning this line that I have drawn in green from the breakout point, we will witness the price chart of the stock falling, and our target becomes this target that you see here. and the chart will fall after that. Well, let's look at a few examples related to this schematic representation together. The chart you see is the chart of Khosra. Khosra has taken an upward trend. The chart has risen to a certain extent. It has come and reached an area that has formed a peak, a second peak, and a third peak. These peaks are of the same size. In these areas, and in fact, we are observing three peaks of the same size here. This area, and this area. But an important point you should pay attention to is this. See, dear ones, we are exactly in this area, if you look closely, witnessing another triple top. This triple top has been created here in this way. The three tops that are in this area, and this trend that this neckline has created in this area. And we must witness the chart falling at least the distance from the breakout point that is in this area, which has also happened. Therefore, right here, you should pay attention to the fact that in the price charts of the stock, we can witness the creation of a pattern within another pattern. And here you see that a triple top pattern has occurred within a larger triple top pattern. And the result we can draw is that the pattern with all its schematic representation can show you its target. Well, let's put this pattern aside now. In this area, we are observing a top, a second top, and a third top. Well, these three tops have exactly created a line here themselves. And you could say they have created valleys that, from connecting these valleys, we reach a line that we call the neckline. And this neckline exactly intersects the range of the third peak at this point. This point, see again in this interesting example, that technical analysis rule that I mentioned to you before is happening. That is, previously the chart would go up, come down, be supported. It would go up, come down, be supported. That is, we were seeing supports for the price chart of the stock here. I am now exactly seeing a support here. I am seeing a support here. And these supports continue until my breakout point is created. And when the price chart actually breaks here, from this area onwards, the behavior of the stock's price chart changes. That is, now the chart wants to go up but cannot. What happens? What? Here a resistance occurs, or more, that is, it wants to come up, touches but cannot break through to go higher. Resistance is happening. It comes here, touches, resistance is happening. Therefore, from this area onwards, we witness the price chart of the stock falling. To what extent do we say? At least from this area, we see a drop in the chart to this extent, which has also occurred on the chart. Well, let's look at another example together. Here you actually see the stock of the company Kurosh Yeo. The development of Iran's lead and zinc mines, which has gradually formed an upward trend from this area, where I have also drawn the line, and the stock has come up, forming a peak, forming a second peak, forming a third peak. And then we should witness a triple top. As you can see, here it can be said that the chart has been touched and a break has not yet occurred, and it has gone up, and in this area our breakout has occurred. That is, exactly from this point onwards, we witness the breakout of the stock's price chart, and this is our breakout point. Our breakout point is in this area, and from this area onwards, we should at least witness the stock's price chart dropping to this point, which has also happened in this area. One point I must mention to you, dear ones, is that again here, I am seeing with a bit more precision that another pattern has also formed within this triple top pattern, which is nothing but a double bottom, a double top that has formed here. And I am also seeing a double top pattern here with these two peaks that have formed, and this neckline that is in this area, and we should at least witness a drop from this area, which has also occurred. Therefore, you are also observing a double top pattern that exists in this area, and is revealing itself and showing its target. So with more precision, you can see patterns within other patterns. Let's look at the next example together. Well, here you can see the overall index chart. There is an upward trend in the overall index. The overall index has grown to a certain point and then it has dropped and again created a peak equal to another peak. It has dropped again and created yet another peak. An important point you need to pay attention to is that in the triple top pattern, the peaks must be equal. But as I mentioned before, the base of these three peaks also creates two bases. However, these bases are not necessary. You see, the bases can be equal, but they don't have to be equal. That is, they can be equal or unequal. This is an example of the inequality of the bases formed. Now you see one base here. Let me change its color. You have one base. You see it in this area, and you have one base. You see it in this area. You see the two bases are different from each other. If you remember, we used to come to the head and shoulders pattern. We would draw an oblique neckline. That is, we would draw a neckline like this and consider it as the neckline. We considered it as a neckline or neckline. But here, we no longer have such a neckline. In this area, for the triple top pattern, we must definitely draw two horizontal necklines. You see, the necklines are always horizontal. In the triple top pattern, I have two necklines here, my first neckline and my second neckline. In these two necklines, how do we now determine our target? If you want to determine the target, you must consider the lower neckline, which depends on your level of risk tolerance. As an analyst, I consider the lower neckline as my decision-making point. That is, I consider this neckline as my main breakout point and then use the amount I feel it can decrease from my first neckline, that is from the distance between one of the peaks to the first neckline. I consider this amount as my target. From where? From my breakout point. I consider this amount as my target and say that at least this amount can be the potential drop in the stock's price chart. All right, let's see if we have another example together. Yes. See, dear friends, this example is another example of a different price pattern that, considering we now have almost a schematic representation of the patterns, we visualize and learn in our minds. Do you notice that just as we had the double bottom pattern for the double top pattern, which was its opposite in the triple top pattern, we can also accept its opposite as a pattern. That is the triple bottom pattern or the triple bottom. All right, let me give a very simple general explanation right here. In the triple top pattern, the price trend of our stock was a positive price trend, and then the chart would get stuck at a triple top, after which we would witness a drop in the stock's price chart, which we learned with its entire schematic representation. But in the triple bottom pattern, it's the opposite. That is, the price trend of the chart before forming the pattern is a downward trend. A downward trend comes down. The pattern, with all its schematic representation, has three valleys. There were three peaks there, and here three valleys that are formed, and after that we should witness the growth of the price chart. How much does the price chart grow? To the extent that these three valleys create two peaks. What is created when we connect these two peaks, kids? Our neckline is created. The neckline actually intersects the third valley at this point. What do we call this point, kids? We call this point the point, our breakout point. This is our breakout point, and we should see the price chart grow by at least the distance from one of these necklines. to one of these valleys from our breakout point. That means if this is the head and shoulders pattern, here we will see the price chart grow by this amount. All right, now let's see this on this example. Here we are seeing a triple bottom. This triple bottom was preceded by a downtrend. It has created 3 bottoms. From these 3 bottoms, 2 peaks are formed. These 2 peaks were formed in these areas. And if you draw these areas together, you have essentially drawn the neckline of your price pattern. And this is also our breakout point that has occurred in this area. After that, we should see at least this much growth in the price chart, which also appears on the chart. Let's move on to the next example if we have one. If not, we'll proceed to the next pattern. All right, let's move on to the next pattern. So far, we have reviewed 6 reversal patterns in technical analysis together. That is the head and shoulders pattern, the inverse head and shoulders pattern, double top and double bottom, triple top, triple bottom. And the 7th pattern is the rounding bottom pattern. The rounded bottom or rounding bottom pattern is somewhat harder to identify compared to other patterns. That means you need to practice the other patterns. Well, learn and memorize their schematic representation in your mind, and then slowly start working on the rounded bottom pattern. The rounded bottom pattern is a bit harder to spot on the chart, but in fact, in the next slide, we will see what the schematic representation of this pattern looks like and how we should identify it on the chart. Well, as you can see, in the schematic representation of the rounding bottom pattern, initially, the price chart comes down with a downward trend. This red line that I have drawn here is actually the trend line, which we will get familiar with in the next topic after the price patterns. I have drawn a downward trend here. This downward trend continues to a point where it reaches a neutral area, which is a completely time-consuming zone. A completely tedious area where many shareholders might become disheartened with the stock and decide not to hold on to it anymore, opting to sell the stock or any other action that might occur with the stock. But as an analyst, you need to identify this neutral and significant area for the stock to determine the rounding bottom pattern. You should assess what trend existed before this area, especially if it was a downward trend, because the rounding bottom pattern is a reversal pattern. After this neutral area that forms here, I will witness a significant explosive growth in the stock's price chart. Therefore, you can identify that growth. Now let's look at a few examples together. We can better identify this pattern on the chart. All right, if we move to the next slide, you'll see that I've brought an example of the rounded bottom pattern for you, which is the price chart of the Khasra stock. You see the Khasra stock is experiencing a neutral zone, and after that, in this red halo that I've drawn, there's actually a very time-consuming and tedious condition that tires out the shareholder. In this area, you witness a decline. You see a very small trigger here, and this decline that is perhaps happening within a week in the stock market, and after that, the stock experiences a very strong neutral zone. However, another positive trigger has emerged in this area, giving you a signal that this stock is gradually trying to move out of this tedious state and enter a trending and directional condition. When this happens, from this area onward, you need to, because the previous trend, your previous trigger was a negative trend, and this pattern is a reversal pattern. So afterward, we should expect growth. And you can predict this growth here and observe a significant upward trend in the stock's price chart in relation to this matter. Let's look at another example together to better familiarize ourselves with this pattern. Well, here I see an upward trend on the chart, but after a certain point it has turned into a downward trend. Look, exactly in this area, I see a downward trend on the chart. And after that, the chart has been stuck in a neutral state. And then a positive trigger is showing up here. This positive trigger indicates that after this downward area, I will witness an upward trend and a powerful explosion in the stock's price chart. Well, dear friends, just as we have the concept of a rounded bottom, the opposite schematic representation also exists. We refer to it as an independent price pattern called a rounding top. All right, let's move to the next slide. If I'm not mistaken, we have an example of a rounding top here that we can explain better. This example is exactly the opposite of the previous example. That is, there we had a rounding bottom pattern, which was a downward trend. We had a downward trend. In fact, we would see it on the stock price chart, and then the chart would enter a neutral and time-consuming zone, followed by a powerful explosion in the chart. In the rounding top, this time we have an upward trend, and then the chart enters a neutral and tedious phase, and after that, a trigger downward causes a powerful explosion downward on the chart. Here too, you can see these conditions on the stock price chart. In fact, on the chart itself, I see an upward trend here on the chart, followed by a neutral zone, a small trigger, here a very intense neutral zone, and after that I should see a significant drop in the stock. And you can see this drop is very steep. Now later on, the charts, you can see that it has turned something like a 72-man stock into a 52-man stock. This means that there has been a drop of about 50% on the chart. By knowing the rounded top pattern, you could have avoided this heavy drop or refrained from buying the stock until the next signals, which we identify in our analytical markets, show us how to enter the down stock. All right, let's move to the next slide. Up to this point, we have learned about the discussion of reversal patterns in technical analysis, meaning we have covered 8 of the most powerful reversal patterns in technical analysis. And for you to truly understand the reversal patterns in technical analysis, mastering these 8 patterns is necessary, no more, no less. Review these 8 patterns carefully with their schematic representations again. Watch the videos multiple times and check the patterns with their schematic representations on the stock's price chart, identify them, see their targets, and then be able to use these patterns for future stock predictions as well. But before we delve into our new topics and start discussing consolidation patterns, I need to give you some reminders about the patterns, which I have included in this slide. Pay close attention to this slide so that you don't encounter any issues in identifying the patterns. Here we say that in all reversal patterns, the trading volume decreases before the pattern forms and the dense area breaks, and then suddenly increases significantly when the dense area breaks. Look guys, the point I've written here is exactly related to our breakout point. At the breakout point, well, something always happens to the stock's price chart. There is always a factor that, according to the same technical analysis principles that I have always considered important to review once during analysis, especially after the history of technical analysis. This is where it becomes fully evident. One of these principles taught us that when we see a trend's movement change due to an obstacle, there is actually a force that changes the direction of the trend. If it was an upward trend, it turns into a downward trend. And if it was a downward trend, it turns into an upward trend. Therefore, at the breaking point, something always happens with those investors and market participants. That causes the chart to break in that area. What phenomenon does this event manifest with? With the trading volume that occurs at that point? Later in this course, we will also visit various stock trading websites, and there I will provide you with detailed and comprehensive explanations on how you can monitor the trading volume of a stock on a daily basis and see how it will be. The next point is that in all patterns we encounter a dense area, and the completion of the pattern is related to the price exiting this dense area. It's the same thing. I always emphasize and say that you can trust a price pattern when it is formed with its complete schematic representation, meaning that the pattern is, so to speak, complete. Once the pattern is complete, I can say this pattern is, for example, a double top pattern. This pattern is a rounding bottom pattern. When the pattern is in the middle of its formation, it is not a complete pattern, and you should try and wait for the pattern to fully develop. That means it should be fully formed, and after it is complete, you can consider the target of that pattern. So never make a decision about the pattern until it is fully formed. The next point is that dense areas usually play the role of accumulating energy in the stock. And the larger the dense area, the more extensive the stock's reaction upon exiting it. This point is very important. It is the same proportion that should be considered between the pattern's target and the time it takes to form the pattern. And always remember, when the stock's price chart is resting in an area, the longer this rest period, the stronger the chart's behavior will be after this rest. This means that if you see a chart where the rest area has taken a long time, it can react with greater intensity afterward. So the rest areas, or in other words, the so-called refueling of the chart, have a direct relationship with their subsequent reaction. The longer they rest, the stronger they can move forward. All right, let's take a look at the next slide together. All price formations, like trends, are composed of various degrees and dimensions. And naturally, the higher the degree of the formation, the greater its importance and price target. You see, this explanation I wrote exactly reflects our previous explanation. That is, the proportion of each variable relative to the other variable is actually shown, and this ratio, this proportion, always exists and must be maintained. Many small formations are formed within larger formations. We have seen this in several examples together, where a pattern can emerge within another pattern. Just pay attention to this point. It is not necessary for the pattern that emerges to be exactly the same as the larger or parent pattern. Let me give you an example. For instance, in a triple bottom pattern, it is not necessary for another triple bottom to form within it. Within a triple bottom pattern, a head and shoulders pattern might form, so there is no requirement for the patterns that form within other patterns to be identical or have the same shape. Therefore, different patterns can emerge. Well, these were a few points that I thought were necessary to consider regarding the discussion of price patterns and price formations. And we conclude the topic of reversal patterns here. In the next section, we will be discussing the consolidation patterns of technical analysis, the powerful analytical patterns of technical analysis, namely the consolidative patterns. With you, dear viewers.